All right, hello and welcome to Camel Finance. I'm your boy Camel, and I've got with me today Tony the Bull Severino. So, Tony, thank you for being here. First question I want to ask you is, how are you doing, bro?
Oh man, I'm doing pretty good. This is a really interesting time for me in particular. Clearly I made some public calls that were more on the bearish side, and we're a lot more bullish than I thought we'd be, which is it's good, man. It's a valuable lesson. I'm obviously CMT, and you can study all you want in books and go through all the classes and courses you want until you start to really experience these things in live markets. It's truly the best way to learn. Especially, we as humans learn best from mistakes. Me making a mistake is good. Maybe I had some overconfidence from such a good track record for a while, and it's good to get humbled and reassess and learn new things. So overall, very good. It was an interesting time, and I'm excited to see where the market goes next. And it was always this sort of situation where, if I'm right and I'm bearish and I'm the one guy who got it right, that's great. If I'm wrong and we go bullish, that's also great because, we all make a lot more money. So, yeah, good times. Thanks for having me on, by the way.
Oh, no problem. Thank you for being here. Yeah, I think this space is quite interesting because all traders and investors get things wrong all the time. And I know back last year, I was calling for a left translated cycle in Bitcoin, looking for a top before November. And when I had to invalidate that setup, it took about 9 months for people to stop trolling me about it. and I think it's just one of those things, man. Like, it's not that deep, you know. We all get things right, we all get things wrong. And I think the thing this space is missing is there's not enough people that have a setup and an invalidation. And they're okay with saying, oh, there's my invalidation, time to flip the other way. I think a lot of people seek certainty in an inherently uncertain environment. And but yeah, man, I'm a massive fan of your work. I really am, and I'm looking forward to seeing what charts you got to show me today. Do you want to kick things off with the stock market?
Yeah, that sounds fantastic. Let me pop this up. Good. Yeah. Okay. So, the big thing right off the bat that I was clearly paying attention to is, and I hear this was a topic on your show recently, was this pattern here. I mean, you know, when you look for significant information regarding Japanese candlesticks, long wicks, this indicates buying pressure and a lot of it. So we had a lot of buying here kick in. This in particular pattern in here is a morning star pattern, and it closed above what is technically the buy trigger here, so halfway up through the black candle. This is a extremely long-legged doji. Possibly you could maybe consider it a dragonfly doji. So you got a lot of bullish signals here. But what's most important is what happens after the Japanese candlestick pattern. So we still need to see follow through in the next, say, 3 to 5 candlesticks. But I mean, admittedly, it truly looks like it's coming. This did not sort of get as heavy momentum wise as I sort of thought it would. There's definitely, we see weakening momentum here, weakening bearish momentum, I should say. And because we're so far above this sort of zero line here, so zero on the histogram here is very significant. And it gives us more chance of potentially turning back up. And if this happens, turning up into strength, it should be a significant move. Things to be cautious about, though. Still, the biggest moves in the stock market do tend to be above 70 on the RSI, and clearly we're below it. This is the average directional index, which indicates trend strength. Price can go up while it's going down, so it's not some sort of like guarantee or anything, but it does indicate that something's weakening over here. So, I'm still cautious there. What I've been sort of saying lately, especially because momentum is turned down, momentum does persist. I think there's a chance that we can move, more sideways here than people are expecting. Ultimately, though, it does look like the bearish thesis is kind of dead, and there's a greater chance of us sort of trending upward here now. It's an interesting time because stocks and stuff, stock market, it's all driven by the business cycle and things like that. And with this tariff situation, I truly did think that maybe the business cycle didn't kind of go the way it was expected. Like, how are businesses truly going to plan around, the future when they don't know what's going on? But I mean, on this 3 month chart, the quarterly chart, this is a seriously undeniable hammer type candle, good and bad. I mean, again, long wick shows buying. This looks really strong. If we end somewhere up here, this thing's going to be a beast, and we're going to have a lot more upside. Blow off top is very probable, I think, at that point, considering how many people are probably off sides. We did hold above 70 on the RSI here, very, very healthy. But when you get a sort of hammer looking candlestick at the top of a trend similar to this, it's called the hanging man. So, there's always some potential still for something negative. But, again, bearish thesis is dying very, very, very quickly. Overall, though, it's still unusual to see the stock market performing when, gold is doing so fantastic. Granted, this sort of structure up here in gold is starting to look, like maybe a near term sort of top is in. And if that's the case, it does make sense for some risk assets to fly a little bit. But overall, I was expecting more of like a secular shift from soft assets like stocks. Even I think some cryptocurrencies very well should be considered soft assets. And towards hard assets like gold, Bitcoin, silver, things like that. So, I recently saw you made a call for gold at I don't remember the exact price, but it was up there. It was in the, I want to say, five figures. And I was really happy to see that, because I don't think people realize what's going on here with gold. And that secular shift that I was talking about very well is still going to happen, where it's just taking longer. Obviously, you can see sort of some of these things happening on the geopolitical front, where countries care more about natural resources and commodities and things like that, gold buying. But
I want to ask you, are you familiar with David Hunter's 8,000 S&P target? Do you have any thoughts on that? Do you think that's possible? Do you think that seems too extremely bullish?
no, I don't. I used to follow David Hunter a lot more closely. I kind of stopped for a little bit. I saw him really kind of ribbing a couple analysts for basically saying that they were stealing his thesis. And it's like, come on, anybody can come up with the same sort of blow off top, all assets participate sort of thesis that he had. So yeah, he just kind of bugged me with that. So I backed off him. But I don't think that's unreasonable. If we're really truly going to start to get exuberant, I do think that that's probably a fair enough call, because I would have to, can you see my chart here? Yeah, so like I would probably look at this as 1, 2, 3, 4, and yeah, I mean a 5 could definitely go up to, maybe it's a little high, but yeah, I do think it's probably reasonable. And if it's really blow off top type behavior, it should have that momentum to really spike up there. So I don't think it's. What are your thoughts, just out of curiosity?
I mean, anything's possible, right? It seems a little bit too high. Maybe my mind just can't comprehend that kind of a move. It would be historic for sure. But yeah, I mean, I'm open to it. But I think I'll be more surprised if we hit it than if we fall slightly short of it.
Yeah.
And of course, we're in this weird situation where gold is running at the same time.
Yeah, I mean, that's that was kind of what I was getting into there. Is it's so unusual. Usually, you see these bigger shifts, and the S&P ratio against gold is makes kind of a more significant move, and they're both kind of doing. Oh, well, gold's doing fantastic, but the S&P isn't doing too bad. So it's strange. I thought gold doing so well was more of a risk off signal than it has been. So yeah, confusing.
Yeah, it's been weird. I'm pretty sure it's a central bank driven rally, and that's why it's going. And my theory has been for a while that they're going to eventually use this to try to balance some of the debt on the books. I think they're going to revalue gold higher and then use it to kind of offset the debt by having a larger USD value of gold on their balance sheet. That's my theory anyway.
Yeah. Wow. Genius. No, that's actually really smart. And yeah, I didn't know that was sort of what your thought process was around gold and everything too. So good to know. Appreciate the discussion.
Yeah, do you want to show us a gold chart? Do you have any insight to where you think it's going, short, medium, maybe even long term?
Yeah. So in terms of gold, I do see some potential for at least, a near term chart here. I'm sorry, near term top here. We've got this sort of pause. We're clearly hitting some sort of resistance. We got sellers kicking in. Ultimately, though, I think this is really truly just the beginning of gold's rally. I'm more in the mindset of like where you're at as well, and this is essentially where I'm at with gold, which is again, people aren't, I think, especially around crypto, aren't really understanding the significance of gold and what's happening right now. So this is the Bollinger Bands yearly chart. We just closed above the upper Bollinger Band in 2024. The bands just started to expand. When this happened back in 2020, I'm sorry, 2005, right ahead, because these things happens right before the crisis, not exactly during the crisis. So great financial crisis was 2008. Clearly gold was starting, but 1, 2, 3, 4, 5, 6, 7, 8 years of this, even if this is shorter, we should still have a few years left of gold making a run. And then if you go back further over here, the same sort of thing. 1, 2, 3, 4. Granted, we fell back into it, but this is so significant, and the bands are expanding. And grant it's not as tight as here. You get way more move out of lower volatility moves create larger volatility moves. This isn't quite as tight or anything like that, but instead it almost looks like more continuation of this move. And when you look at Elliot wave principle and things like this is potentially our wave 1 coming out of this correction. So if this is a wave 3, it could end all the way up here before a much larger correction again, several years long. But something's definitely going on with gold. For a little while there, it was like, I was expecting something to happen around gold, and then we got that really weird news about the lead. And I assume that's going to create some sort of maybe short-term trouble. The scientists being able to turn lead into gold. I think that it's one of those silly things that people could spook people a little bit short term, but ultimately, near term top in gold. But I think this thing has so much longer to go. That, and even like on the volume, look at the volume just kicking in and everything like this. And I have a couple other charts where I point out volume that I'm really excited about to show later. And as bullish as I am on gold, it's really this silver chart that I'm most bullish on. I'm more bullish on. This is the most bullish asset, most bullish chart that I have. The significance of the potential breakout of, this is January 1980. This pattern is older than I am. So the idea that it's going to break out, it's just so exciting to me. And even just when you go on lower, this is the yearly chart, and same sort of thing. This is just starting in silver. We haven't even got the expansion here. Look at this: 1, 2, 3, 4, 5, 6, 7, 8 years. Look at this rally. So and this is the type of move that I'm really sort of expecting from silver, something on the lines of this final sort of thrust here. And I just don't think that people are truly prepared for what this is going to be and look like. And it's, for me, it's really exciting too, because everybody in crypto, they don't want Bitcoin for the most part, because it's only got like a 2, maybe 3 at most X out of it. They want something that's more like a 10 and 20X. But if you take the measure rule height of this pattern and just to here, and then project that from the point of breakout, you're looking at $370 an ounce gold. Silver, and it's from 30. This is a 10x. You know what I mean? Like that's exactly what crypto investors want, and it's a way more trusted and proven asset that's been around for centuries and centuries, used as a monetary standard. So I like my money in silver right now. I feel a lot more safer from a risk standpoint. And I mean, when you get a chart that looks this good and is breaking out, I mean, it's hard to deny. So I think this is going to be one of those trades. People pile in. It probably moves real fast. I don't think it shoots right to 300, 307. Maybe it probably undershoots that target too. But I think I'll probably start taking profit a little bit more over $100 an ounce into potentially even $200 an ounce. So yeah, this is a good one, a really good one. Again, bullish pretty much on like every single time frame, even the monthly and stuff looks really, really good. And now just taking a little side break here to just talk about the Bollinger Bands. Now, this is probably my favorite tool overall. And the reason being it uses a standard deviation. And, when you look at the standard deviation curve, clearly most of the moves sort of happen right in the middle of that curve. And then, it's rare for moves to actually get outside the Bollinger Bands. So there's significance in that. And when you get that much strength to actually make it outside the Bollinger Band, you tend to get this continuation. And not always. This one clearly turned back in. This one, eventually turned back in. But for the most part, this is, when it's really strong, this is what we're looking for. Similar over here. And I think we're finally going to get that in silver. So this is going to carry, at least it's going to do it to me a 2-3x very quickly before, any type of more significant consolidation. Now, again, this is a really strange thing for me where when I look at it like this was, this real big rally in silver was ahead of, all the inflation and oil crisis at the late 70s, 80s, early 80s, things like that. We had, real bad stock market crash in the early 80s. I don't remember the exact date. But, clearly macro wasn't fantastic and, eventually did turn well. And all through the 90s during the stock market and, the economy doing so well, there was, silver went into this big sort of valley. And then, we had the great financial crisis and it all started to happen again. Bitcoin was born, over here somewhere. So I don't know yet how it fits into all this. It should, in theory, with its commodity-like supply and scarcity, it should technically do these sorts of things in crises. But, these crisis sort of behavior tend to wreck the stock market. And Bitcoin's correlation has been so tight with the stock market that, I've been a little fearful, does this wreck Bitcoin? And so far it hasn't. And I wanted to kind of start my kind of spiel on Bitcoin out with the bar replay tool and just kind of show everybody why it was starting to get bearish a little bit. And, this is the log MACD, I chart and log. If you look at the regular MACD and try to look across cycles, it doesn't show this like this. It will, each one of these bumps is tiny and it gets larger and larger because it's based on the linear chart. Anyway, these sort of bearish crossovers are significant. It's never not created a 70% drawdown in Bitcoin as far as I could see in history. And even this little tiny one over here, this was over 70%. Even this over, this crossover here, this was still ultimately 70-something%. So to see this start to cross down after a bearish engulfing, the ADX, you can see this was starting to turn down, telling us trend was weakening, and it was happening here. Turning down, trend is weakening, happening here. Fall below 70 on the RSI, clearly bear market. So I had bear market signals pretty much all over the place. This was a bearish engulfing that was pretty significant to me. And then lastly, you can see, as we get towards the top, the Bollinger Bands like literally fall off the chart, fall off the map. So we didn't get that. I was really looking at this as all right, either maybe this move hasn't fully started yet. That didn't seem to make sense to me, and us turn back up. And the other theory was, all right, we're going to get tight here, move a little sideways, and then this thing is going to break down for the first time. And, there at least was some sort of evidence to suggest that. And some of the evidence is, these weakening highs here could eventually send us, more down here. As you can see, we've never truly been oversold on the monthly time frame. I thought, maybe that happens. I found some supporting charts of the S&P 500 that did such a thing eventually in like the late 1970s. So all these sorts of things I thought, and well, I guess the last point I wanted to make is momentum persists. So, you can see we turned bullish. It persisted all the way until it turned. And just like, if you imagine a rocket ship kind of like climbing up or a roller coaster, and then boom, it goes down, and it goes down faster. It picks up speed as it goes in momentum. So I was at least expecting, this to persist a bit with everything else kind of teetering down, and it just didn't. And now instead, we are at a much more bullish picture. You can see we narrowly avoided that bearish crossover. That any failed bearish signal to me is also a bullish signal. So you know what I mean? Like if the bearish signal didn't work and it was clearly on the chart, then there's more to that and something's going on. You got to pay attention. So now we have increasing bullish momentum. RSI is back above 70. The ADX is still kind of pointed down, but it doesn't necessarily, that's not the worst of these things. It could just say we're kind of weak at the moment. And I think the volatility here sort of continues to sort of suggest that as well. What's interesting though is we still don't have this massive expansion here. So this very well could be coming. We could tighten. So what I was kind of trying to get at in my more recent newsletter is to get people kind of used to the idea that maybe this isn't just blast off like they think. Maybe we got to go sideways a little bit more. And the reason being is this tightening like this is showing low volatility. Expansion is where you're getting the large volatility. Maybe it happens. I mean, I don't know how tight or narrow the bands need to get or anything like that. But, to me, there's at least some chance with the way momentum is still kind of, sideways-ish, trend weakening, not quite, if this doesn't close above 70 at the end of the month again, yeah, we're probably going to look at some more sideways. And again, the way things have been going, it's been so bullish, like and euphoric that maybe this really does just blast off. It's certainly a confusing time for me. Another chart I wanted to show off was truly just the BTC CME chart. This is one of the charts. I know for a while there you had been showing off what I was calling that wall of worry. Bitcoin is still in this. I'll take this one away for a moment to kind of show this off a little bit more clearly. Bitcoin is still hanging out in here. It broke down from it slightly, but reclaimed it. I think this could potentially give us some upside target, at least in the before another correction, and that could be somewhere maybe around anywhere between like $168,000 per Bitcoin, which was some of my earlier Fibonacci targets, the Fibonacci-based targets for Bitcoin. And at the very least, we may encounter something a little bit more significant for resistance around 128, 130. Things always like to spike above these sort of lines. But I do think this larger channel has significance. And the reason why I think so is, if you look, we stopped here, we have a gap here, hung out, consolidation here, gap above it here, resistance here, gap. There's just a lot to this that I think, basically, your first high, significant high, your first significant low, swing low, same sort of thing. So if Bitcoin can continue to travel and start to get into this sort of upper half of this, maybe this does come into play, and it can leave this channel and eventually touch up here. I truly didn't think so, but with how the more time goes by, the higher price can go. It's just a fact of how this all works. More growth essentially and more capital coming in. But yeah, I do think maybe there's really actually some potential to get all the way up there, and it'll certainly be interesting if we do. Here, I'll pop this over. So now I was an Elliot wave guy, and I had 1, 2, 3, 4, 5 waves. That was another reason why I thought we were going to be bearish. I have to obviously give that up. So I'm not really sold on any sort of count anywhere now. It kind of broke and invalidated what I had been believing. But this is kind of one of the newer counts that I'm dealing with, which puts this whole thing to me may have been corrective. And while this felt maybe like a bull market, it could have been a corrective wave in a larger a bullish corrective wave. So corrections can certainly be, on the bullish side and, during a downtrend. So this clearly is a downtrend. This is, a bullish correction. This would be a bullish correction. So, this ABC, this is our bearish correction, ABC, bullish correction, ABC, bearish correction. So, and that's 3 waves labeled WXY. Would be a complex wave 4, about double to triple the length of wave 2. And these things have to have some harmony to them, meaning, 1, 2, and 3 and 4 should either be equal, they should be double the length, or they should have some sort of Fibonacci relationship like 1.618, the length. And this is, I think, like 2.618 overall when I measured it. And if this was the reason why I'm thinking that maybe this is the case, is this is a very different bull market than this and this. And when you truly get down to like the smaller time frames and look at something like a trend angle, you can tell that things are just very, very, very different overall. So now this particular bullish cycle, bullish impulse, around 65 degrees. This one was around 65 degrees also. So it looks even a little steeper, 68. And when you look here, we're nowhere near as steep. So either this, this is another thing. Maybe this is coming and we're going to start this. So, we want to be prepared for a lot more exuberance and a parabolic rally. But, again, if you look back here, that sort of same thing happened. I want to say this is very similar. And then, we started to get this. So again, this may just be, this is how Bitcoin truly is in its bull cycles. And we're going to get something a little bit more like 2017, but, in its own way. And yeah, so other things I'm looking at is there going to be some sort of an altcoin season? I really don't know. I very much subscribe to the idea of like what you're suggesting with no broad-based altcoin season. This is an interesting setup here. First of all, there is this sort of area here. There is a gap that it's kind of hard to see. Japanese candlesticks. It's called a falling window, and it acts as support or resistance. And it's interesting to me that we got this doji in pause at this falling window. You can see there's a similar looking candlestick upside down over here, same over here. So there's definitely indecision around this level, and that could lead to reversal and turning down. This is our momentum. It may turn down. Again, hard to tell, hard to predict the moment. We did close back in the Bollinger Bands. It's not very volatile here. And then another thing I saw that was pretty interesting, the TD sequential indicator. This is automatically painted by the tool. It is called TDST resistance. And we hit this and boom, altcoin season. Well, it's kind of interesting that that's where we are right now. I don't know. Do we get altcoin season here? Do we have to hit it, kind of plunge into it more? And one last spike up in Bitcoin, favoring Bitcoin over alts. So something to watch. I do think that we're getting nearer a point where this may reverse and altcoins may see some benefit. The last thing I'm not sure of, though, is, do we make new lows and like alts go nuts? Is this a very muted move? And then it kind of goes back to Bitcoin. I favor more the muted move. I don't know if we have all this sort of room for fireworks left in crypto. And actually, before I even jump into that total chart, I want to pull up Ethereum. And this is one that I'm, again, really just overall confused about. I have a diagonal trend line of some significance, clearly, that it is potentially stopping at. And then I have a horizontal resistance line that is clearly of some significance that it is potentially stopping at. Breakthrough and even take this out, man, I bet Ethereum absolutely rips. Hard to kind of say that that's going to happen at this moment, especially, if you look at this sort of level. I always like to see confluence in my indicators. So, the middle, the Bollinger Band basis is right about there. The Ichimoku cloud, it's actually above it. In fact, I'm going to remove this little thing so you can see this better. This is one of the more confusing things to me, truly. So Ethereum made it above the Ichimoku cloud, held it as tested it, retested, held, and then some. It lost it, and my thought process was didn't spend all this time getting above it to then lose it to then reclaim it. That seems just like kind of like chop and yo-yo action where this is supposed to be a lot more decisive. Like when you broke through the cloud over here, clearly it was a big deal. So very confusing to me. This is the Kijun Sen or the baseline. The blue is the Tenkan Sen or the conversion line. Well, they are in sync right over here. This can be bullish. It's called the bullish katana. I've seen another account named Cantonese Cat talk about. I would like to give them a shout. They're a fantastic account for Ichimoku and some other things. And so it's stopping here. If we get above this, this will flip bullish. We're above the cloud. There's really nothing else for resistance. Another thing is the Chiku span or the lagging span. It's back 26 periods. Well, it getting through candles tends to be pretty significant, and it found support over here, which is significant. So if this Chiku span cuts through this Kijun Sen over here, there's a lot. This is more on the complicated side. Ethereum will look a heck of a lot better. So I'm still watching and waiting here on Ethereum. It bounced a lot more than I ever thought. This is a great Morningstar pattern over here too. So this is a confusing one for me also. Ethereum, if it's going to do well, it is truly going to just take off from here. And from a technical standpoint, I was really kind of more on the bearish side from around Ether. But this chart came up recently. A friend of mine showed me another analyst named Bits of Wealth. Give him a shout as well. And he said, what's going on with all this DeFi volume? And volume precedes price. We could tell volume started to kind of get interesting over here, and then it absolutely went nuts. So something was going on, and this happened. He noticed this a few weeks ago, or at least a week or two ago, or something like that. I'll go to the weekly chart, so you can see it start to pick up over here. And then we just got news yesterday that the United States is removing regulatory boundaries around DeFi, and so that explains why this is happening. And clearly there's a lot of insider stuff going on right now, especially with our president, which feels great when the leader of the free world and most powerful man out there, unfortunately, is gaming markets for him and his family's benefit. That's great, isn't it? What's funny about that too is insider trading is actually like a really big trait of a wave 5. Because people start to see sort of markets lose a bit of their integrity. And that's one of the things that turns people a little bit more bearish as we approach some sort of top. So I thought that was interesting. And then it sort of speaks to another one of the charts that I really like. And it's this cryptocurrency AVE. I don't know, AAVE. It's that, loan protocol. And this is just a really good looking chart, very cup and handily, basing structure for several years. And, looks like we're working on getting close to some sort of downtrend break. And I just very much expect an explosive move here. And part of the reason why I like this coin is I said earlier in this that I don't really believe all cryptocurrencies are considered hard assets. A lot of these cryptocurrencies have supplies that are just ridiculous and or fluid, which I don't really believe in. Well, this is one of those coins that has a very low supply. I want to say it has a low, I don't recall 100% exactly what it is, but I do know it has like a lower supply than BTC. So at, around $300 a coin, I think this one truly has, a 10x potential to it, maybe even more. Part of the reason why Bitcoin does so well and appreciates so much in price is just because of that limited supply. Low supply means in a market driven by supply and demand means, demand can overwhelm supply a lot faster and lead to sharper price discovery. So I'm not one to take a lot of bets on altcoins. But if I am going to, this is one of my bigger bags right now. One of the few altcoins I really scooped up like on an earlier basis. I love this sort of like flip over here of this area. You can tell it, retested it. This is what you want to look for. And yeah, I'll sort of end my presentation here on the total chart. This is another one. We have at the moment, it's still 1, 2, 3, 4, 5. If we never make a new high, I'm gonna claim a little bit victory on calling the bear market. I missed it clearly on Bitcoin, but I would have caught it on crypto. But overall, this chart is looking a lot better than it was. This is TD risk. There's still a little bit of potential for resistance here, but truly it looks like it's going to get above that. My raging bull is fully turned on. Granted, it can have some false signals before some corrections and stuff like that, but it's a momentum based tool. It's totally fired up here. I think it makes a go for it. My invalidation level here is clearly, again, this parabolic star. I know it got tagged over here, but I don't think it necessarily does. I should say, I don't think it turns into a reversal here again. I don't think, given the sentiment and how emotional both bulls and bears were during this whole area, I don't think there's any way. Like if this does go up, it's gonna be a lot. It's gonna be a sharp, and that's kind of what I was talking about too with all of this is. When I was uncertain, I don't want to risk my capital and things like that. But when I become certain, these moves can be really obvious and clear. And it's like, even if I got in over here in this version of it, I'm still going to make all this money. I don't need all this down here. So yeah, a little bit different strategy than I think a lot of other people. And yeah, that approach I guess lost me some followers and stuff, but I think people would be wise to protect their capital more. And a comment I made recently was, you lose your capital, you have nothing to get it back with. If you miss out on some games, you still have your capital to get those gains back with. So yeah, I do think that people should be a little bit smarter with their money, but I get it. It's crypto. There's a lot of enthusiasm and euphoria, and people are going to kind of get excited about that and gamble a bit. But yeah, that's kind of all the things I'm looking at right now.
I think there's a massive difference between traders that, like you say, look to protect capital and many people that are in this space that have come in with almost no capital and are trying to turn that into something significant. And I think it's quite difficult for those people with the lower account balances looking for a lottery ticket to comprehend that once you've spent a long time making your capital, then the focus shifts to protecting the capital rather than to continuing to try to hit lotto tickets all the time. So yeah. I think it's just kind of two different dynamics that operate in the market at the same time. I do want to ask you a few questions if you have a few minutes.
Yeah.
Do you think it's possible on this chart right here that we've done 1, 2, 3, 4, and now we've done 1, 2 again, possibly setting up for 3, 4, and 5 in an extended fifth?
Truly, I was not of that mindset, but so there's an interesting thing in Elliot wave principle where these waves have personalities. And this was something that I was kind of trying my best to pay attention to and learn from is the 1, 2 is basically what they consider retest of lows. And during the 2, sentiment is sometimes worse than at the bottom. And usually the macro conditions are also pretty bad and sometimes worse than at the bottom. So I guess an example of this also would be, this was the bottom over here. COVID was a hell of a lot worse macro and scarier, even though this was the bottom. So I was kind of thinking like, this would be a confusing thing so it had 1, 2, 1, 2 behavior where, this felt worse to me and macro conditions seemed worse than when we were all the way the hell down here. So it did have that sort of personality. And, this is another good way to look at it too. And I'll move to the weekly is, I mentioned something about this earlier about the length of correction. So this is about the same. This correction here is about the same length of this correction here. This one is slightly shorter, only very slightly. And what I'm getting at is when you count all these, I'm just going to throw them here just so I can show what I'm talking. This degree, and so um, basically this would be a 1-2 of just one lower degree, so minor degree or something like that. So yes, I do think that that has to be a possibility. This, if especially if it really makes a strong move here, I would say this is then this, and we're gonna cruise up, make one more strong move here, where we're gonna have a little bit lengthier consolidation, but it's still gonna lead to this, and then possibly still gonna lead to another one of these. So I do think that that is something. It's a real possibility now that I absolutely have to consider, and especially if this is taken out with strength, I think this literally just cruises. So um, good question, and I am giving that some validity and weight now. I'm a little bit more of a wait and see on that, but I do think that that's possible.
I thought the other thing that was really interesting was when you were showing the Bitcoin chart and you were showing the angles that we're going up at the moment, and you made the case that the current angle is not very steep relative to the prior blow off tops. I know we could, in theory, see a normal blow off top, and that would be pretty typical for crypto. But whilst you were presenting that, it suddenly occurred to me that since this is institutionally driven, and blow off tops, although they're extremely common in crypto and Bitcoin, we now have this kind of different dynamic at play. And
Mm-hmm.
we know that retail participation has been hitting bear market lows of late.
Mm-hmm.
I know Ben Cohen puts out a lot of metrics that shows how little retail participation is there based on social media metrics and engagement and that kind of thing. And I often say on my channel that I know people are conditioned to expect the blow off top, but most markets I've seen and traded, especially outside of crypto, the tops tend to be quite sneaky. They tend to staircase their way up and then kind of go sideways and kind of roll over. And people are still going, oh, buy the dip, buy the dip. It doesn't look that bad. And then, of course, you get counter trend relief rallies on the way. And people go, there you go, see, back to new highs. And sometimes it can be quite sneaky. I think we even saw this in 2022. I don't think most people were ready to call a top until we were practically at the lows. And then I noticed every man and his dog was posting 2008 crash fractals back there in the stock market. And yeah, as you were showing me that, it just kind of occurred to me, like, what if we don't get the blow off top? It just staircases up and then kind of quietly rolls over. I think that would be extremely difficult to deal with. And based on the momentum oscillators you've been showing, it would kind of be obvious in hindsight, right?
Yeah, absolutely. And you know, you really make some good points, and that was even another reason why I was potentially a little bit more bearish too. Is just my thought process was, look, we're institutions are the ones that are buying Bitcoin now. It's not retail. We made everybody's comment was like, well, we had no euphoria in crypto, and it's like, well, you know, you're only euphoric if you're the one who's making all the money and holding the thing that's doing well, and none of the altcoins did well really. So, you know, most of crypto Twitter aren't going to be euphoric on Bitcoin because they didn't really buy it, or it was too expensive. So and institutions, you know, they're used to stock market performance. You only have to, and so that's a really great point. So going through the CMT program, I was heavily taught about outperforming a benchmark. And the benchmark for almost every portfolio manager out there is the S&P 500. So your goal is outperform the S&P 500. And if that's the case and you're in Bitcoin and crypto, you have this absolutely massive outperformance, you know, you're more uh, apt to take profit on that and spread that capital around, you know, be a little bit more defensive with it, reinvest it at a pullback. That's more institutional behavior, and I do think that's actually why we've had such a um, like lower sloping trend angle all this time. And you know, maybe if we do get a steep, like a really steep move up, like that sharp move up, maybe it's more driven from like irrational exuberance from Bitcoin treasury companies kind of going a little too wild. I mean, in the end, it's still humans driving these companies and still humans behind institutions. Not always, I guess there's a lot of algorithms and bots and stuff involved, but you know, humans can get irrational at every level. The dot-com bubble was, you know, not all retail driven, and clearly it went a little bonkers. So you know, it's possible. Blow off tops can also come from people getting so bearish that they get, there's so much short pressure out in the market. Everybody's getting squeezed up. There's a lot of reasons why it can still happen overall, but I think the truth is about this entire cycle has really just been kind of like more expect the unexpected. And it would be wise, considering the way the momentum oscillators look, to maybe not expect such a sharp move up. And but yeah, great question.
I've got one more, I think, if that's okay.
Absolutely.
Bitcoin dominance. Could you pull up the Bitcoin dominance chart for us, please?
Yes. There we go.
So if I forget that this is Bitcoin dominance, and we completely forget the idea that historically this thing climbs up towards the end of the 4-year cycle, it rolls over, and we get a big alt season. If I forget that and I just look at this, I don't really see any reason to be bearish on it. Just at my eye and based on my experience, I look at that and I say I don't really want to bet against this yet. And I know you mentioned you kind of on the same page as me with no broad-based alt season, but I don't know. I wanted to ask, based on your experience of having quite a large following and seeing the sorts of things people type and stuff, do you share this experience? What I see is most people seem to be near certain that this thing is eventually going to roll over. And here's the key part. When it does, probably go all the way back down to the lows. But I want to know, number one, do you see that as well? And number two, I kind of think that this thing, if it does roll over, it might only go down 10 or 15%, and then it could pop right back up. And that, I think, would fit the idea that there's just a handful of coins doing extremely well, and the majority of them don't do anything. So is that something you see? Is that something you agree with? I'd love to know.
I absolutely agree with that. And it's so, actually, there's one scenario I really want to consider. And another thing I should have pointed out, I guess, earlier is it's the RSI. I had been talking about how in Bitcoin and total and everything else, when these assets are strong enough to get above 70 on the RSI, it usually stays above there for a while, and that's where the biggest moves happen. So first of all, this is definitely not necessarily reverse right back into altcoin season type stuff. You can see over here, we got this sort of bump into oversold conditions, and then the true altcoin season happened when we went back to oversold conditions. So we may fall back in here and leave overbought conditions, give us a muted altcoin season where select coins do well, DeFi sector, something like that. Then boom, pop right back up into above 70, and we get something like this in Bitcoin, like up. It's really not a safe place to really go. This is what another thing I was stressing in one of my recent newsletters. Because this is above 70, it is not safe to be in altcoins right now, in my opinion. I'm definitely nibbling a little bit and dabbling, but I like, this is the riskiest feeling of altcoins, even riskier than during all this, and look how wrecked everybody got. So definitely think that, to agree with you, these people widely and broadly on crypto Twitter and in my audience, they very much think that this is going to reverse right into a 2017, 2021 style altcoin season. I don't think so. I think the speculative nature and buzz around crypto has really been killed a lot through FTX and everything like that. I think so there's less sort of gambling. The gamblers who are out there, they're in meme coins. They're not in, something that's 300 down the list on the altcoin, market cap. So, our select altcoins with real fundamental value behind them, those will probably do well. But yeah, I don't think this ends up being this crazy altcoin season at all. I think the days of altcoins are sort of over. When this happened, no one really even knew what Bitcoin even was. No one knew what altcoins were. They were willing to just throw any amount of money at these things because they were going up so much. And that's what it was created, like a frenzy of buying. And, we had some of that here, and it was driven by such, quantitative easing, and like, social media was kind of irrational around then because people were trapped in their houses for so damn long. So, I just don't see these same conditions here for that would warrant some all-out altcoin season. But look, my friend, what we've talked about this a lot throughout this whole thing is there's been a shift towards quality, a shift towards gold, silver, Bitcoin, and all these things are reflected in the charts. And it's really hard to say that any of these altcoins have real value like that. Things people want things in scarce supplies. There's not a lot of altcoins like that. So unless there's some sort of major risk on signal and so much money is being made that it makes sense to gamble on alts, I just don't see him doing well. I posted a Dogecoin chart yesterday. In fact, this was not planned, but because we're talking about it, I think it makes sense to pop it up real quick. And another thing too is there's people have to truly be hopeful here around altcoins because they haven't made any money yet. So if you haven't made any money, of course they have to hope for a broad-based altcoin season. But this is the 50-month moving average. Someone told me it's flat. It's not flat. It's turning down. I mean, this is how blind some people are, as they'll tell them they're going to say it's flat, or someone said, oh, the month didn't close yet. Like, this is an average. It's going to do this whether you want it to or not. It's an average across 50 months. So anyway, this to me is kind of a big deal. It's the first. This shows people losing interest, and it could always turn back up and blast off with the rest of the market. But I don't know. I just think overall, even if we do get some sort of rally up, I don't think Dogecoin's going to do this again. I don't think that for a second. I think there's so many sellers here that need to unwind. I think there's more likelihood of going down. And there's 1,000,001 meme coins too. Why would you put your money in this versus something else? So yeah, very weird times. I think the narratives around altcoins don't make sense anymore. There's not a fundamental reason for most of them to do well. And this is going to be a more fundamental driven rally if we do get rallies and things like that. So
yeah, we've also got kind of three factors in play that I think are going to make it even more difficult to have a true alt season. And that's number one, there's just so many more now. There's so many millions of altcoins to choose from that there's just not enough capital, period, to pump all of them 100x, right? Number two, because as we were saying earlier, the institutions are largely driving this now. I don't see a realm in which they take a bunch of Bitcoin profit and rotate it into a lot of speculative stuff. Now, they may play the top 10 or a handful that they already have probably got big bags in or whatever. But largely speaking, it seems unreasonable to expect BlackRock to be rotating out of its ETF and into Dogecoin or whatever. And then on top of that, as we also discussed earlier, retail have largely left, right? And again, it speaks to that institutionally driven rally now. And if retail aren't here, then who's going to buy them? Because the institutions certainly aren't. And even if you say, well, I'm going to buy some, which of the tens or even hundreds of millions are you going to choose from? So I think the odds are stacked against it. But I certainly do, and I've been consistent in saying this, I expect a handful of them to do extremely well when this cycle is finally over.
Yeah, for sure. I have a handful of picks myself. What always gets me though is, those people, you see these accounts on crypto Twitter, and they're like, here's my list of, the 10 to 20 coins that with 100 to 200x potential. And I mean, I've been seeing these people post these same damn lists for 4 or 5 years now, and none of these coins ever do 100 to 200x. And it blows my mind that there's still people out there who are like, oh, I gotta see this list. I'm gonna go out and buy these coins. Please, don't ever base, whoever's listening, please don't ever base your decisions on what someone else has said, and certainly not an influencer like that. Those people are peddling that stuff. They got I get offered part of a supply of coins all the time to promote them. I won't do it because that's incredibly unethical, shady, and I don't want to be involved in scammy stuff. But I get offered constantly. You think that some of these other influencers out there aren't taking this stuff and literally feeding you crap so that you'll buy it and they make their money? This is not a trustworthy space. So yeah, I don't buy any of it. I think it's ridiculous in terms of risk. I think just like you said, pretty much anything outside the top 10, maybe 20 or so coins, I really wouldn't touch. And so I don't know if I have more of that sort of institutional mindset. I don't know if it's just the charts. I'm a risk averse guy, but that's how I feel. So I really wouldn't recommend anybody else is really doing so. And then again, just like I was saying earlier with that AAVE, look for coins with some scarcity, look for coins with use cases that are actually have, or like even what Camel said, coins that BlackRock's actually looking at. They are looking at other coins and experimenting with other, sectors and things like that. Go after that. Don't go for, you know, something 500 coins down the list just because like you like the community. The community ain't making you money. So be smart with your money more than anything else. I realize there's hope. People love to have hope. It's hard to give up hope. If you've been invested in, there's something called sunk cost bias. And basically people, they already put so much time and money and effort into being invested in something. And they're like, well, I got to stay with it. I've already done this. And it's hard to give up that hope. It's hard to give up that energy and time that you put into something. But sometimes that's truly what's best for you. So if you're in that predicament now and you're hearing this, please just think about what you own and if it's in, and really do a true assessment. And again, don't listen to me either. Don't listen to any influencers. Do your own research. Pick out bits and pieces of what people like Camel and I say, and use that to formulate your own thesis and thought process. Don't ever follow anybody blindly.
Very well said, brother. Very well said. Do you have any questions? Do you want to let people know where they can find you? I'll put the links to all of your stuff in the pinned comment and description. But I know you're doing Slice as well, aren't you? Are you finding that okay?
Yeah, so I love the Slice. I want to grow my community there. I like interacting with people who want to learn things. When I got into all of this, I wanted to truly be less influencer trader type guy, which I've kind of become more known as. I wanted to be more educator. I don't really want people following my trades or me talking about being bullish or bearish. What I want to do is say, hey, this is a morning star pattern on the monthly. This is what it could mean. This is what you're looking for. Those are the things I want. That's what I want to be about. That's what I want people to know me for and what I want to give back to the world. So, I think Slice is the perfect platform for that. It allows me the opportunity to do things more hands-on. I've been doing video content there. I love what you're doing. I think you're doing a fantastic job. You clearly have a very engaged, loyal community. I see the comments from, obviously in any community, you get some weird or mean comments, but you have attracted a really intelligent audience that pays attention to the right things. And it was very clear, like, I want to be around that and your audience and the same type of people. So Slice is a great platform for that. And I just need to hit my groove, get a little bit, a few more people on there so that I understand what they're looking for and can deliver that. But yeah, and other place you can find me is coinchartist.substack.com. My most recent issue I made entirely free just because I wanted people to just see the technicals that I'm talking about. And it's really talking more about like momentum is sideways-ish right now. Therefore, we may want to expect some sideways and we don't blast off right away. If we do, that's fantastic too. That, there's still slight air of caution to be had. So that, and I release the newsletter weekly and $9.99 a month, $99 a year. That you can also be a free subscriber. I always give away a ton of free charts, at least like 5 to 10 free charts every single issue, because I want people to see my work. It's definitely not me doing this stuff is truly less about monetization. Everybody wants to make some money for their time, but I love this stuff. I left a really good career in media to do this because I love it. And, maybe that's another good thing to point out is maybe I can be a little bit abrasive sometimes. I am a content guy, and I'm a content guy for 20 something years who's now in a place of analysis that has to be really serious. And sometimes I can forget that and get a little too excited and involved in everything. I was having a little bit of fun there, honestly, being a bear. And maybe I went a little too far and turned a couple people off, which is just want to explain my fun that I was having with. I used to watch wrestling a lot when I was a kid, and it was always this sort of like significance around a good guy turning bad, like a Hulk Hogan coming out being the bad guy, and all the audience is like, what the hell? Just drives so much emotion. I guess I had my sort of like heel turn, and I was kind of almost like having some fun with everybody being so shocked with it and everything like that. But truly, the bull nickname is because I want everybody to make money and everybody to be happy and be prosperous. That's truly what I'm about. I'm not Bear Tony. It was just a fun little phase I was having, and he'll be back someday. And when he's back, he's gonna be right the next time, but not this time, my friends. And so, Camel, thanks so much for having me. This was spectacular. I love your work. Love the things that you're doing, and I just wanted to personally thank you while on air for the video you did about me during like sort of the peak hate around me. That was really cool of you. It was super unbiased, super respectful. And it meant a ton to me for you to say, like, hey, this guy isn't just blowing smoke up your asses. There's some value here. He could still be wrong. I'm opposed to his idea. You handled that. So I wish other analysts could take a note from that, and that's the way you approach things. So thanks again for that, and thanks for having me on.
No problem. Thank you for coming on. Thank you for the kind words. I really appreciate it. And yeah, I know you're going to flip bearish at some point, and I think people will do well to listen, to be honest, because I think it's very easy and for everyone in this kind of space to just be permanently bullish, and they kind of get away with it because Bitcoin is often bullish, but there is always a time where we're going to have to take profits. There is a time when these cycles are going to top, and it's no good just being permanently bullish in an asset that may have an 80% drawdown during a bear market. So yeah, I appreciate your time. Thank you for all the work you put out. Thanks for being here, and I'm sure we'll speak again soon.
Cheers. Thank you.
Okay, take care, Tony. Bye.